Feel like you're ready to get on the property ladder, but are you worried that your bad credit is going to be a problem? Well, today we'll be covering 5 key signs that could mean you're ready to take the next step and get a bad credit mortgage. So, key sign number 1, you've got at least a 10% deposit. Unlike standard mortgages, bad credit mortgages typically require a higher deposit. The starting point when it comes to bad credit mortgages is usually 10% of the property's value. If you do have a 10% deposit or more, this could be a sign that you are ready. And that's because not only does having a larger deposit increase your chances of approval, but it can also mean that you unlock a lower interest rate. Does that mean if you have a 10% deposit, then you're definitely going to be approved for a bad credit mortgage? Absolutely not. But it is a great place to start. And as long as the mortgage lender is happy with the rest of your personal circumstances, then you could have a chance. If you'd like to know more on exactly how much deposit that you will need, dependent on the type of bad credit that you have, great news, we do have a video on that too. And you can watch that by clicking on the link in the top corner of your screen. Number 2, you have more money coming in than you have going out. Lenders will want to see that you can comfortably afford your mortgage payments. A key indicator of this is that you've got more money coming in than you have going out. This basically means that after paying for things such as your rent, your bills, loans, credit cards, and your other expenses, that you still have money left over at the end of every month. An easy way to check this is by taking a look at your bank statements and actually having a look at what your balance is at the end of every month. If the balance is higher than it was the month before, this is a green flag for all mortgage lenders because it shows that you're handling your finances responsibly. On the other hand, if for example, someone is living at home with their parents and they have £2,000 coming in every month and they spend all of it, plus they're also spending £200 a month on their credit card, then this will be a big red flag to the lender because it is a sign that this person could be living beyond their means. 3, you're not behind on any payments. Being up to date on your payments with things such as your loans, credit cards, or your rent shows lenders that you are being financially responsible. If you've been making all of your payments on time, that's a strong indicator that you are ready to apply. And that's because even if you do have a history of bad credit, a recent history of good financial habits will work in your favour. So if you can demonstrate that your bills have been paid on time, every time, for a sustained period, then this will carry a lot of weight when it comes to the application. But how do you make sure that you don't forget to pay your bills? Well, that's quite simple. Set up a direct debit for a day of your choosing and the payment will come out automatically. Okay, the money will still need to be in the account, but at least you won't forget to actually make the payment. Number 4, any defaults and CCJs registered against you are over 2 years old. While lenders do consider your entire credit history, old issues do carry less weight than recent ones. So if any defaults and CCJs that were registered against you are now over 2 years old, you will find that you're in a much better position to be approved. And that's because lenders will see that these financial struggles are in the past and that since then you have been handling your finances responsibly. So as long as these are outside of that 2-year period, irrespective of how many there are or what the values of these are, then this could be a sign that you're ready to qualify. Does this mean that if I have a CCJ or a default within the last 2 years that it's definitely a no? Actually, no, it doesn't. If your default or your CCJ was registered for a value of under £500 or even better yet, under £300, some lenders will completely ignore it. Also, if it was registered for something known as a communications account, for example, a mobile phone bill or a broadband account, then once again, there are a handful of lenders out there who will completely ignore it like it never happened. And finally, number 5, you're prepared to pay more than you typically would for a high street mortgage. The chances are, if you're applying for a bad credit mortgage, the interest rate won't be as low as someone with excellent credit applying for a high street mortgage. And that is because someone who has missed payments in the past is typically viewed as higher risk than somebody who has a history of making their payments on time. and for that reason, the lenders will usually charge a higher rate of interest to offset that risk. So, does that mean that you're going to be paying crazy, sky-high interest rates? Well, I guess what is a high interest rate is open for interpretation, but what I can tell you is from our experience, most people will see that they might typically pay 1 to 2% more than they would with a high street mortgage. So, using this example, if a typical high street lender was offering an interest rate of 5%, then you might be offered an interest rate of 7%. But in reality, it could be anything. You could be offered an interest rate lower than this, and at the same time, you could be offered an interest rate higher than this. It all depends on your personal circumstances and what market conditions are at the time of applying for the mortgage. So, as long as you understand that you might be offered a higher interest rate than you would with a typical high street mortgage, this is probably a sign that you're ready. So, do these 5 things sound like you? If so, it could mean that you're ready to get the ball rolling. And if it's not meant to be right now, then it certainly sounds like things are heading in the right direction. If you have any questions or any ideas for future videos, please feel free to pop those in the comments below. Alternatively, you can pop us an email using the email address in the description. So, thanks for watching. Please make sure that you hit the subscribe button and you turn on the notifications for all tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.